In today's video, we're going to do a full deep dive into Uniswap, all versions of Uniswap v2, v3, and more specifically v4. And my goal here is to provide you with enough information to the point where you can go to Uniswap, decide whether you want to trade, become a liquidity provider, how you could become a liquidity provider, and overall just manage your capital through the platform. So the first thing I want to discuss is what Uniswap actually is classified as. They have many products, but natively, Uniswap is a decentralized exchange. And what you need to know is you can trade on Uniswap, and you can also provide liquidity on Uniswap, facilitating other people's trades. So starting on the trade section of Uniswap, they have swap, limit, buy, and sell. The first thing that we're going to discuss is just a simple swap. A simple swap is just as it may seem. You select one asset, like Ethereum, and you select another asset, and then you type in how much Ethereum you want to swap, and it will spit out exactly how much USDC you are set to receive. So in this instance, I typed in 1 Ethereum and I selected USDC, and it says I will get 1972 out of this trade. Now, if we break this down, we could see the fee over here. We could see the network cost. In this example, there is no network cost. We could see the route that it's going through. In this case, it's going through the Uniswap API, which routes us through a V4 liquidity pool where it trades Ethereum for wrapped Ethereum. And then, of course, it trades that wrapped Ethereum for USDT and trades that USDT for USDC. And then you can see the price impact, which tells you how much of an impact your trade has on the actual market price of the pool. In other words, how much is it going to push the pool down percentage-wise? And then in addition to that, we can see the max slippage. The max slippage is basically telling you what your minimum is. So in this example, it's saying we will receive at least 1953 USDC out of this trade. Otherwise, this trade will not go through. The transaction will not be executed. It will be denied and it will fall off the blockchain. Now there's some settings over here where you can adjust the max slippage. I recommend putting this at auto. Same thing with swap deadline. It's set at 30 minutes, but if you need to push a transaction through, you can put this lower. I've never had a transaction that takes longer than 2 minutes on Uniswap. And then of course you have your trade options. Again, I would just keep this set to default, but if you want to do anything more specific, you can choose which routes it goes through. So does it go through Uniswap X, which is an aggregator, or does it go through V4, V4 hook pools, V3, and V2 pools? Again, best to just set it to default. There's also the limit section, which is just like a swap, but it allows you to actually set a limit price. In other words, if we want to sell 1 Ethereum for some USDC, then we could say when 1 Ethereum is worth, let's just say 2020 USDC, then this trade will execute. We could set an expiration date like 1 day, 1 week, 1 month, 1 year. It's basically buying an asset or selling an asset at a specific price. Next thing is buy as well as sell. These ones are relatively simple. You're essentially on-ramping capital here. So I'd essentially buy $100 of, let's just say, Ethereum. It would allow me to pay through MoonPay, Stripe, Robinhood, Coinbase, any option. But this is a way to on-ramp as well as off-ramp capital. For the most part, I do not use this because I use a different mechanism for actually purchasing and off-ramping crypto. But that right here is going to be the trade section of Uniswap. The next thing is going to be the pool section of Uniswap. Now, I know we're skipping Explore and skipping Portfolio. We'll get to those in just a second. The pool section is where you can actually create or, of course, invest into an existing liquidity pool. So we would start over here by going to New. When we go to New, it will give us a multi-step option. Now, something I want you guys to pay attention to is V2, V3, and V4. You need to select what type of position you want in the top right-hand side. Now, keep in mind, V4 seems like the logical next step just because it's the latest version, but sometimes, or most times, you will earn more money on V3 or have higher fees paid out to you in V3. And we'll also discuss a little bit later on how you can actually formulate a strategy, find which pools are the best, and stuff along those lines. You also have the same exact thing in the settings, the max slippage as well as transaction deadline. But moving on, you would select your pair. So in this example, maybe I want to do Ethereum as well as USDC. I would select Ethereum, select USDC, and then of course it would give me the option to add a hook where I would enter in the contract address here. We're not going to be diving into hooks today, but if you guys want me to do a dedicated video on that, first off, like and subscribe if you're new here, but second off, let me know down below in the comment section. The fee tier is exactly how much fees are being charged to the person that trades through this pool. And just as I showed you on the swap page, people do not choose to trade through pools. The API routes them through specific pools, basically. So in this example, we want to go with the fee tier that's going to produce us the most money, which will we'll have to determine later on, but a lot of the times that is going to be the one with the most TVL. TVL is how much money is in that pool. So there's $25 million in this pool right now in the 0.3% fee tier. So we'll select that one. If we wanted to create another fee tier, we can, or we could select some of these lower ones. Again, there's trade-offs. Certain fee tiers are going to perform better during certain periods of volatility or, of course, chop in the market. Now, after we select the assets, we select the version, we select the fee tier, you will see the option to set a price range. Your price range is where you are providing liquidity at. So full range means you're providing liquidity from literally 0 USDC to essentially infinity USDC per Ethereum. Now, one thing I want to drill in your heads real quick is we're not looking at this in terms of dollar prices. We're looking at this in terms of how many of one asset equal another asset. So in this example, let's just go ahead and select custom range. You can see the min price defaults to 1811, max price defaults to 2130. That's saying that at the price of 1811 USDC per Ethereum, that's the bottom of our range. Max price would be at the price of 2130 USDC per Ethereum. Now, again, right now, that's equal to the dollar price because USDC is equal to $1, so those are kind of interchangeable. But when we start to deal with, say, wrapped Bitcoin paired with Ethereum, now we're not looking at dollar prices. We're looking at how many Ethereum go into one wrapped Bitcoin. How many Ethereum does it take to equal one wrapped Bitcoin at our bottom min price? How many does it take to equal at our top max price, basically? And we'll dive into that a little bit later on as well. This chart right here will show you the price over time. So again, right now, this is the dollar price. In the example, we're looking at, say, Ethereum per wrapped Bitcoin. It would show how many Ethereum equal one wrapped Bitcoin over time here. Over on the right-hand side, it shows you where other people are allocating liquidity. So if we do the current price, you can see that there's about $43 million of ETH on the current price and $1.79 of USDC on the current price. When we look over here, above the current price, it's all Ethereum in these buckets. When we look below, it's all USDC in these buckets, basically. Again, we can set a price strategy, which is just going to automatically select our price. Or, of course, we can just type in our min and max price over here, which I would recommend doing after you find your range using an external tool or something along those lines. And, of course, when it comes to actually deploying your capital in here, you type in one asset and it pre-fills the other asset. The ratio of these assets depends on the range that you select over here, right? So, for example, if I type in 1 Ethereum, then it's going to say I need 23.99 USDC. Now, if I start to adjust my min price, you'll see I now need more USDC. That's if I'm bringing it down. If I'm bringing it up, you'll see I need less USDC. Going back over here, let's say I adjust my max price. I go up on my max price. I now need less USDC. If I go down on my max price, I now need more USDC. Then, of course, we can deploy our capital in this position, which I'm not going to do right now because I don't have much ETH in my wallet. Moving on, though, let's take a look over here at the Explore page. And there's a lot of data here. It's essentially the analytics page of the Uniswap platform. You can see the volume, the TVL across different versions like V2, V3, V4. Now, one thing I want to pay attention to is number one, tokens. So let's just say we look over here at Ethereum. When we look at Ethereum, we have the option to view a lot of data and information about Ethereum, see it on other networks, lots of stuff. Pretty cool, right? Well, we can also go down here, look at the transactions that are happening with Ethereum, but more importantly, look at the pools for Ethereum. So you can see if we select Ethereum, top pool is Wise to Ethereum with 114 million in TVL. Then we have USDC Ethereum with 92 million in TVL, so on and so forth down this list. So one of the things I would like to do is look at, let's just say Monad, right? If I click on Monad and I go over here to pools, I'm going to be able to see all the pools with Monad over here basically and look at the TVL, look at the version, the fee tier, the APRs, everything is shown here. So it's great for just quickly finding pools associated with specific assets. Now, auctions is where companies can distribute tokens. Now, I don't use this, but essentially you would place a budget and place the max token price you are willing to pay. And of course, tokens would be distributed over time. Again, this is kind of like buying seed rounds, basically. Next thing we'll look at is the actual portfolio page, which will just show you where your capital is allocated. Now, it pulls in Uniswap data and it also pulls in holding data, but it will miss out on some stuff if you're on other platforms outside of Uniswap, I will say, which is why we use third-party external tools. But you can browse through your overview, your tokens, your NFTs, as well as your general DeFi activity. That right there is the actual Uniswap platform. Now, very quickly, I want to show you a couple other products they have before diving into actual strategy. So they have their Uniswap wallet, which is something that you can download on iOS, Android, or Chrome. And it's essentially just like Rabby Wallet wallet, just like MetaMask or any other wallet, except it's Uniswap branded. Obviously, there's some USPs here and stuff like that, but I personally don't use it. I've heard it's great. It's just, again, I prefer to use something along the lines of Rabby. They also have Uniswap X, which is actually natively integrated right into Uniswap, which is just a smart router for making sure that you get the best outcome out of your trade. It routes through multiple liquidity sources. It's MEV protected. And of course, it's just the best execution. Again, I personally do not use decentralized exchanges directly. I use aggregators that analyze multiple decentralized exchanges. Sometimes that routes me through Uniswap X. Other times that routes me through other platforms. They also have their API. If you want to integrate Uniswap into your platform or something like that, you can use Uniswap's API to do that. Last but certainly not least, they have Unichain, which is a DeFi chain that was built by Uniswap. Again, there's some USPs here. We won't dive too deep into them, but let me know if you guys want a dedicated video on that. Now, diving into the actual strategy behind Uniswap, it's important to formulate your own, but what I'm going to show you is a way that you can formulate your own. So we're relatively limited with the tooling that we can do on Uniswap, so it's up to us to use third-party tools and platforms to create our strategy. Now, there's plenty of platforms out there. There's plenty of tools out there, some free, some paid. Some free ones have trade-offs. Other paid ones provide you with immense data. What I'm going to show you is Metrix Finance. And full disclaimer, this is our own software. I am the founder. However, it's great, and we have a free version if you'd like to try it out. If you'd like to try one of our paid plans, we have a 7-day refund policy. If you try it in 7 days, you don't like it, you click this little button right in the right-hand corner, send us a message, and we will give you a full refund, no questions asked. But we have 3 core functions on Metrix. There's the discover function, there's the simulate function, and there is the track function. So starting on discover, this is going to help you find the pools. So it's similar to the Uniswap explore page. It's just we have advanced filtering. So not only do we support Uniswap, we also support other decentralized exchanges and a lot of different networks. But focusing on Uniswap, let's just say we were to look specifically on the Ethereum network. Number one, when it comes to all of this data, you get to choose how many days you want to factor in. My rule of thumb is to do a 14-day calculation time frame. That analyzes the past 14 days of data and averages it out. In other words, the average daily fees, the average daily volume, which is used to calculate this APR, that is using the past 14 days. Correlation, price volatility, that's using the past 14 days, right? TVL, that's just the flat current number right now, basically. Now we can filter by assets. Say we want to look at stuff with ETH in it, we can do that right here. And then maybe we want to look at stuff with Tau, Bitcoin, Render, or RNDR, I should say. Stuff like that, we just type it in over here and it will let us filter. In this example, I just want to look at stuff paired with ETH. APRs, I usually do not filter by them yet. TVL, I'm going to look at greater than $1 million, basically, just because I don't want to dive into illiquid pairs. I'm also going to look over here at the daily fees to TVL mark, and I'm just going to sort that by highest to lowest. Now, my rule of thumb, once again, is to look at how many pages there are. There's 6 pages, 10 per page. That's 55 pools. We're going to go to page 3, basically, and we're going to cut it here. So we're going to cut everything after page 3. Meaning we're going to take this number right here, the 0.0207. We're going to look at higher than that. So what exactly did we just do here? We essentially took the top half of the pools that have high fees compared to the liquidity that they have. That's typically going to be more consistent and, of course, produce you higher income when it comes to your actual APR. And that's so we don't have to sort through all the noise and everything like that. You don't have to do it that way, but that's how I do it. And the reason why we don't do a solid number like 0.01 or something like that is because literally these numbers are changing every time. So we do it by cutting the list in half, basically, and using kind of a dynamic model here. But now we have a lot of different pools that we can sort through over here. One of these ones that I'm actually in is this Ethereum to Tau position. So let's just head to simulate right over here. When we head to simulate, it's actually going to pull up a simulation for Ethereum to Tau. It's going to show us all the data that Uniswap has and more. So we can see the liquidity. Like on the current price, there is about $300,000 of liquidity. It's 274 Tau, 126 Ethereum. Right to the right of the current price, so going from 11.06 to 11.29 Tau per Ethereum, you could see that there is now only 70K. Right to the left, there is 80K. Now we can select our price range here and everything like that. Again, I could do a dedicated video on finding prices if we need to, but let's just say I were to set my price range something along the lines of this, showing I'm doing a 271% APR. Now, the blessing and the curse of Metrix, I shall say, is it's composable, meaning that you actually have to make sure that this right here is accurate. But with that being said, I'm going to show you exactly how you can do that. So first off, you want to adjust your calculation time frame. Look at the past 14 days of volume and ask yourself, is this consistent? The way you can determine that is by looking at the average. The average daily volume is $376,000 per day. Recent days, we are doing 300,000, 434,000, 499,000. So I would say yes, this is consistent. Even in the recent days, we have inclined a little bit, meaning we could actually get a little bit higher. Now, next thing I like to do is look over here at the liquidity distribution and start to select different prices. Our calculation method is set to average, meaning it is averaging out 28K, 22K, 30K, 79K, 300K, 69K, 31K, and of course 21K, right? It's averaging those numbers out to find an average amount of liquidity per price, which seems rational, but it seems irrational when you factor in that this current price, where the price currently is and where the price has been consolidating over the past nearly 14 days, has the most liquidity. So if we just click on that, or we set our calculation method to custom price, it shows that we're doing a 66% APR on current price. To the left, we're doing 250%. To the right, we're doing 283%. Over here, we're doing 620. Over here, we're doing 644, right? So what I like to look at is the current and surrounding prices of the current. So typically these three buckets based on where the price has been. And I like to kind of put together somewhat of an average number in my head. So I jump into this pool assuming that I'm going to do about 66%. If I'm happy with 66%, I will jump in. If I'm not happy with 66%, I say, how realistic is it for me to get 66%? Maybe I end up getting 80 or so, 90, right? It's not going to be nearly as high as 250% all the time, because a lot of times this liquidity will also move. And then the next thing I do is I back test. I use this simulate position performance to say, well, what happens when Tau goes to a recent high and Ethereum goes to a recent high? I'm looking over the same period because I want to make sure that ultimately my simulation is accurate, because there's going to be divergence. So say Tau goes to 200 and Ethereum only goes up to, let's just say, 2100. Well, that's Ethereum going up 5.59%, Tau going up 9.13. There's some divergence there, which creates this opportunity cost, also known as impermanent loss. And then it says exactly how many days we need to cover that. And we ask ourselves, how many days does it take to see this divergence? Well, once again, that's where we'd use CoinGecko, TradingView, and other external tools to, number one, find future prices that are actually reasonable, but number two, see how long it takes to get those future prices and see if this number is shorter or the number that it takes to get to those prices is shorter. And there's lots of other things that you can do on Metrix Simulate, but that's all that I'm going to show you for now, just because I don't want to spend too much time on this. And then once you enter into the liquidity pool, you can actually track your performance directly on Metrix by just simply throwing in your wallet address. So one thing that I like to do in my portfolio is acquire more assets. I mean, if I start with, say, 1 Tau, I want to have more than 1 Tau in the future. Now, I'm currently invested into an Ethereum to Tau position. It's currently down on the overall profit loss scale. However, it is currently up when I look at how many assets I've acquired. That's what the difference between profit loss and profit versus HODL is. So let's look at this pool that I'm in right over here, Ethereum to Tau. You can see that I have 78.65 here, and I have about 385 of earnings. Now, this is how much I currently have in the pool. Now, if we dive in deeper, you will be able to see my investment details and everything like that. And since I only have one pool open on this wallet right now, you can see actually my overall deposit of $9,900. Now, I'm down $1,650. That looks at the fact that I lost $2,000 from my deposit going from $9,900 to $78.65. But then I gained $385 in earnings. That's how the profit loss is calculated. Now, it also tells us how many earnings are we keeping after we factor in that impermanent loss that we are discussing. In this case, it's 46%. We're keeping 46% of your earnings. Now, keep in mind, the lowest can go below zero. It can go infinity below zero, basically. But the highest can be 100%. It will show unclaimed versus claimed earnings. It will show versus HODL, which is how much we're actually profiting after that impermanent loss. It will also show us APRs based on our actual historical data in the position so far. Now, I'm going to dive deeper into this to actually show you some more information. So again, we see those aggregated metrics right up top over here. We also see our position composition, how much we started with versus how much we have now. We also see our overall position earnings, unclaimed versus claimed, as well as our divergence loss across literally 4 different metrics. So looking here, we started with 20% Ethereum, 80% Tau. And looking at our divergence loss, if we held in that exact 80-20 ratio, we would have $8,090. Since we're in the pool, we have impermanent loss exposure, we have 78.78, which means there's a $211 difference not weighted in our favor there. But then when we add 386 to that negative 211, we get a profit versus HODL of 175. Now, what if instead of holding that 80-20, we held in 50-50? Well, Well, that's those numbers right here. What if we just stuck it all in Ethereum? It's right here. What if we stuck it all in Tau? Well, that's right here. And that would have actually been the best case, and it's outperforming our pool. So profitability on this metric tells you that you outperformed. In other words, you acquired more assets for free without having to deploy more capital. We see all the information about our price range over here, like min, current, max, average starting, as well as how long we've been in range. We can flip the pricing terms if we wish, and we can even set price alerts to get notified at our email whenever we're about to go to range. That helps you prevent further divergence loss. It shows you your position liquidity over time, so you can see exactly how this performed. It also allows you to track longs and shorts in case you might be hedging your position and see every single interaction with this position. So I deposited on January 29th, over a month ago, and I've just been waiting this pool out. So that's exactly what Uniswap is, the V2, the V3, the V4, right? And how you can use Metrix Finance to better perfect your actual investment strategy. If you guys enjoyed today's video, make sure to drop a like, subscribe, notifications turned on. And if you guys want to use Metrix, the link is going to be at the bottom of the description. See you guys later. Peace.